Keep trading simple, and welcome to this week's Nadex weekly charts and analysis. It is February 15th. We are officially over halfway through February already. It seems like a blink of an eye. We are talking about, going into February 1st, and now we're already looking at that March 1st number. So pretty interesting how fast time flies. They always say that, time flies when you're having fun. But it is so cold outside. I don't know how it's going as fast as it is. Anyway, let's go right into things today. There's quite a bit to talk about. Not as much market movement as you would necessarily think. There are positives and there are negatives going on in the market, so let's make sure that we, get both sides of those covered. For those of you that are new today, every week we get some new people in. I get some email messages. I appreciate it. Just so you guys know who I am for any of the new people in, I run a company called Keep Trading Simple. I am not a Nadex employee. I have been working with Nadex now for about the last, I want to say 4 years. Like I said, time flies, absolutely. I've done different education summits. I do some analysis sessions for them. I've done some articles in the past. But basically, I've been trading since about 1999. I'm a price action based trader. I am not huge on indicators. I know how to use them. I'll use them as a confirmation tool only, but I try to keep things as simple as possible. Again, with price action, I am basically supply and demand focused. I don't have a magical crystal ball. I'd like one. Sure, if you guys have one, please send them to me. But I do not have a magical crystal ball, and I'm very big on kind of money management and again, having everything done kind of set and forget style trading. So if that's for you, then you'll enjoy today's session. With that said, starting in 1999, I've kind of seen a lot of ups, downs, sideways during that time. 2 major market crashes. I'm part of that. Y2K. Is where my actual career started. I was a financial advisor for one of the big 3 banks, so I got to kind of see things from the inside of the market. I can say that I actually worked on Wall Street. Where I lived in New York City, my apartment was 2 blocks from the New York Stock Exchange. So I walked past it every single morning. You would always see who was ringing the bell in the morning. They would always have a banner up. I got to see the gigantic Christmas tree and all the lights outside. And the bull, I could actually see the bull outside my window of my office. So pretty cool. I traveled across the United States as well as Canada, kind of helping people learn how to trade the markets. And that's why I love doing these presentations now, because I can bring it online. I don't have to travel to do it. I can do it from home, so I can spend time with the family. You guys know this is an old picture. I need to update it, but we don't have a family picture yet with the little guy. But the little guy does attend these sessions. He's not here today. He's with mom, but sometimes he's around as well. But that's who I am in a nutshell. Before we begin, I do have to cover the Nadex risk disclaimers. Trading on Nadex involves risk and may not be appropriate for all, and members risk losing the cost to enter their transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility, your own risk. Now, past performance is not necessarily indicative of future results. None of the material presented herein is to be construed as a solicitation, offer, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC. All right, so that's always a big mouthful. When that comes through, hold on, I'm getting an alerts going off. Let's go here. All right, I just want to make sure I close everything down that I possibly can. Let's see. Do that there. All right, sorry about that. All right, there we go. Oh, I thought I had it, and then it popped on me. All right, there we go. So, all right, what we're going to cover today, this is our agenda. We're going to cover the upcoming news events for the week. There's quite a few big ones. Things like today with, Ukraine and geopolitical events are not on the calendar, unfortunately. We don't know when those things are going to happen, so those are kind of surprise occurrences. But everything else, all the economic releases, those are pretty easy to grab. First things first, we're going to cover indices, then we'll go into Forex, and then we'll go into commodities. As simple as that. I mean, we're going to do breakdowns, find opportunities for today as well as during the week. Whoops, that's not what I want to do. There we go. Let me click this button. Update one thing, and then all of a sudden your charts and everything are all over the place. It's crazy how that works out, right? Anyway, here's kind of the footprint of what we have going on right now. Euro dollar up 61. It's the biggest mover across the board. Obviously, the reason why is what I just had up there. You're seeing a lot of news on the Ukraine scenario. I'm kind of perplexed by it all. I don't know what's going on with Germany, why they're the outlier. I guess they have never been the conquered. They have only been the conqueror, minus the end of the war. So Not sure what their kind of softness is, but the way it's unfolding right now, it's I think it's only going to cause some more problems in the future. I'll cover that in a second. And it's funny, yeah, yeah, we're gonna have to cover it real fast. Anyway, the news today, things were not great overseas. Okay, the economic sentiment in Germany was down. Their overall European sentiment down and contracting. And again, they were throwing every olive branch they can. Our PPI, the price of goods and services, came out and basically it came out and it was twice as high as expected. So it's always one of those things when you have a forecast and it's kind of baked into the final product and it comes in twice as high. That's really what the market should be focusing on, and it's not. It's so absorbed into the Ukraine scenario right now, not what PPI is. We've seen some major headlines lately from Bullard, and this gives him 100% credibility in everything that he has said. There's going to have to be some major action coming. And there's actually something pretty interesting. It's in the next slide. I'll kind of show it to you in a sec. But this is a big deal, and it's being watched over right now because of Ukraine. But this is really going to fund what future economic policy is crafted like in the United States. And then manufacturing, obviously much, it's lower, but it's better than it was before. So, New York has it kind of funky. Philadelphia, if you remember, had a really good data last time. So not as concerned about that. Now, going into tomorrow morning early, we have a bunch of news. You have the pound CPI year over year. 5.4% is a large number, right? Their mandates are about 2. So when you're, 2.5 times, they've already raised interest rates. They've already taken the first steps. We're kind of behind there. And again, the question is, are they going to do it again? And even month over month, they just raised interest rates, 2 months ago, and we're already seeing it creep up much higher. It's like, oh wait, minus 0.1, they must have got it under control, and now it's accelerating again, which shows us that the pound is going to have to do it again. I'm sorry, this is for CAD. CAD has not done it yet. So again, this is one of those things that they're next in line. Sorry, I got my two mixed up. But again, CPI, I think they're going to raise again. The CAD is at the same range. Now we have the core retail sales at 830 for the US. Again, retail sales is one of the top, I'd say top 5 at this point. Top 5 biggest movers for the markets. Both were negative last time, but now they're picking back up again. It's interesting. You're seeing the cost of goods and services go up. We just saw that with PPI, and you're also seeing retail sales go up again. Things are going to start being passed down to the consumer very fast. It's whether lower company profits or people are going to pay higher prices. Neither of those are necessarily good for the overall stock market. So again, these are factored in to be good. We'll see how good they can be or whether or not they're going to be disappointing again. This was a little bit of a disappointment, but it was kind of projected, but not as bad as they were. Then we have industrial production. FOMC, I think, is going to be very important. We're having people say, yeah, I'm on board for 25. And you have Bullard going, I want 100. And pretty much I think the consensus is now with an 80% certainty that there's going to be a 0.5. I've been saying that since October. The first one would be a 0.5. And everybody was like, no, 0.25. Again, I don't have a crystal ball, but the writing was on the wall. Bullard yesterday mentioned that we're going to do a 50 and then another 50. We'll do 100 basis points by July, which would be our next 2 meetings. That would be 50 on the first, which is in line. And then the question is, do we do a 50 or a 25 in the second? So a lot going on. But again, FOMC is going to kind of suck up a lot of the market volatility tomorrow. Reason why is because they could drop all kinds of bombs tomorrow. Metaphorical bombs, not real ones. Again, yep, we're going to do a 0.5. They could telegraph that one. They could say a 0.25 or even a 5 maybe on the table. A lot there. So again, FOMC meeting notes right now in this current environment. Now, and again, especially if the Ukraine scenario is over and done with, if it's over now, that's it, world peace, there's no reason not to raise them. Even more reason they have to raise it, maybe higher than expected. Because that was the one, well, wait a second, we shouldn't raise because... the Ukraine, what could happen? There could be an invasion. There could be World War III. If that's gone, you got nothing. There's literally nothing that could hold them back. And the question is just how much. And then we have employment changing the unemployment rate in Australia tomorrow night. You guys know, guys and girls, I absolutely love these Australian releases. My students are always, they call it the RU. They've named it. a lot of opportunity, so much opportunity at night. You don't have the influences of the U.S. banks for the most part. So great training. If the fact that it's at nighttime, you can do it after dinner. It's really been awesome to trade it. It's always been my favorite time to trade is at night like that. So again, if you're not looking at it, you guys are missing out. I don't care if you know nothing about Forex. A chart is a chart is a chart. Watch this. This is a great little trade setup here, right? Thursday, we have the Philly Fed manufacturing. We have unemployment claims. Now, unemployment claims, again, they're creeping lower and lower. Now, Philly Fed last time, it's expected to be lower, but remember, it was a huge explosion last time. It was a big miss, right? New York was bad. Philly was great. It's less than it was, but it's still more positive than what they were claiming. And again, unemployment claims dropping even lower, kind of a big deal. And we have G20 meetings, so there will be some headlines. And like I said, right now, everybody's kind of just focused on Russia. Again, I'll cover Russia in a second. We have Blard speaking right here. All right, he's speaking at an economic and monetary policy at a fireside chat at Columbia University. Yeah, there's questions, but again, fireside chats don't have as much movement. That's why it's only here. But he is considered a major speaker. And then Messer is speaking. Messer's made some comments, but at 5 p.m., talking about policy and outlook. That may be some, but the reality is at 5 p.m., how much movement is there really going to be in the market? Answer is probably not a whole lot. Is it going to be great trading opportunity? Not really. I mean, Mester is a voting member, right, in 2022, but is Mester, throwing massive amounts of weight around? Not really. So we'll see. I think of the two, I think Blard provides the biggest opportunity there. And then obviously going into Friday, we have retail sales for the pound. They were horrible last time, also expected to be good. So we're seeing inflation 5.4 and retail sales at 1.1. Again, this is forecasting what could happen. Again, especially if it blows it out. CAD, core retail sales. Now these are all expected. They're about a month behind us in all their actions. We took our big hit and they were positive in January. Now in February, we're going to see their month over numbers and they're supposed to get hit. Again, they're just a little bit behind where we are. So again, these are pretty negative numbers. I wouldn't be surprised if they're negative, but if they come in at like a negative 1.5, this could be a really good opportunity for short dollar CAD based trades, basically meaning that Canadian strength coming in. Again, then being overly negative, the market pricing them in, and then having them this be a miss. Even if it's negative, right? It could be a 1.5, and that's much better than the minus 2.6. That should provide some strength. Existing home sales, not really a big mover. Again, G20 headlines most likely will be out on Friday. We'll see some on Thursday, but most of them will come out on Friday, kind of at the end of the week. And then again, we have Waller speaking and Bernard. Now, she should absolutely, hers is a panel discussion about central bank digital currencies. She's kind of been the champion on the FOMC board or committee or whatever you want to call them for the digital currencies. She's the driving factor. I would say right now, I don't know how much market movement this is going to have for the stock market, but any crypto traders out there, I think it's extremely important to hear what she has to say because the blueprint is being written by her, for lack of a better word. Now, again, there are other countries testing it that are farther ahead, China being one of them. Right now, China is writing the global playbook. She's been very, very big on a digital dollar. And again, when she comes in, I think it's going to be some crazy swings inside of that market. The question is, again, any crypto traders out there needs to be very, very wary about this one, what she says, because she is printing the blueprint. And again, it will affect the dollar and it will affect gold, right? But again, mostly it's going to affect cryptos, not necessarily indices. So watch out for that on Friday. So that's kind of it. And then again, Saturday, nothing, Sunday, nothing. And then Monday morning, because we don't speak again until Tuesday, we start getting into the flash services, manufacturing. Again, we get to see this German data. So as far as the headlines we've seen and why the market is so green today, obviously all the scenario, everything with what's going on with the Ukraine. And we heard that they were pulling back, right? We heard that they're pulling back. Schultz from Germany, right? Olaf, he says that NATO Eastern expansion is not on the agenda currently, right? Looks like NATO full membership is officially off the table. Now, that's not according to the Ukraine. The Ukraine before was like, no, we're still joining. But it takes a while to do it. It's not like an instantaneous, hey, you want in? Yeah, you're in, right? It's not like a secret handshake and, an Animal House style spanking. It takes a little while to get in. So the Ukraine was creating agreements with the UK as well as the United States, mutual agreements back and forth. that's a way to circumvent it and still have the power. Because remember, the United States is basically the main. If the United States decided to pull out of NATO, NATO basically disappears. Most of the funding comes from us: weapons, soldiers, resources, money comes from the United States. If we pulled, it's gone. So, not sure what Germany's doing, but we've seen a number of different, kind of, it's funny, right? The Ukraine, articles like this, it's funny that Russia is now like, oh yeah, we'll do it, we'll do this. But when you look at some of the meetings, when you start talking over here, you have Putin saying, yeah, no, we'll see diplomatic solutions. Sounds good. They're not in. Okay, we'll go to but we need to resolve this question right now. Basically saying that no, you're never allowed to do that, but he's not going to give assurances never to go in, right? And now that he has the chink in the arm, he's going crazy. Now, what I find crazy about this is they've already taken and annexed one thing, and there was no repercussions to it. Like now, it's like, oh no, I'm going to take over the rest, and when they do, then what? Everybody's got egg on their face, and I think at this point, the United States and the UK just make a deal with the Ukraine. And again, we don't negotiate with terrorists, but it was originally the concern was don't join, and now what he wants to do is if you read some of this further, is this one? No, it's one of these up here. Basically, what he's doing now is he's saying, okay, they're not allowed in. Okay, I also want this. I want them to limit missiles. I want NATO and the United States farther away. They're not allowed to do that. Like, so now there's like 5 different things, and this is what happens. You give him an inch, he wants to take a mile, and he's getting everything he wants. And I feel like this is only going to embolden Putin even more. And, so it's great that the markets are up. I mentioned it earlier that we have positive and then we have negative. And actually in one of these broadcasts, I don't know which one it was one of them over here. Is it this one? Basically, the United States has said that they've seen absolutely no troop movement whatsoever. That they said, the Russia has said that they've pulled away, but they've seen no troop movement whatsoever. Okay. And again, how do we know? Yeah, we got satellites. We can see if they're moving troops or they're not moving troops. Thus far, no troops have been moved. Even though they say, no, we're willing to, this. But at the same time, they're also, practicing blowing up ships in the sea. So one of those things, providing a positive force. But right now, is there anything currency-wise in the world that's going crazy, that's blowing it out? No, right? We have dollar weakness more or less across the board, and the dollar Swiss has moved 3 pips. What is that showing you? Globally, the world doesn't believe that it's anything because, again, if everything is solved, there should be more movement in the dollar Swiss. So just, keep some blinders on there. Be a little bit more cautious with it. Let's go across and let's start looking at some of these currencies for the day. So obviously, the VIX is down. I mean, it started dropping yesterday afternoon, and it's really since this morning is kind of baselined and kind of stopped. And again, a lot of this is the Ukraine situation. What's going to happen? Are we going to war? Are we not going to war? Remember, we got a briefing last week that we had 48 hours. Everybody get the heck out. Right now, we've passed that 48 hours. There has been cyber attacks against the Ukraine, which again, if they tie back to Russia, I feel like that should be caused anyway to protect us. They should protect themselves. But right now, obviously, with the VIX down, that sends all the markets higher, right? 8.8% is a big drop. And again, a lot of that started yesterday. There was that one spike at like 2 o'clock in the afternoon, and then boom, sharp to the downside. So makes sense why the indices are doing what they're doing. The dollar hasn't done much. At 9 o'clock this morning, we had a huge dollar rally, came up, grabbed this, and pushed right back down. We're exactly where we were from earlier this morning with the European Open. So not a lot of movement in the dollar. You would think, wait a second, we're averting World War III. There should be more, and there's not. Going across to the indices. Now, the indices are pretty excited. We saw early this morning, 3 o'clock in the morning, again, oh, we're going to pull things back. Oh, we found a solution. Great. We saw this large push higher. Okay, large push higher. I mentioned earlier today, we have a 50, we have the 6180. It's kind of bouncing between these two. I like how we have a level of basing. I like this parabolic move. If we're unable to come to an agreement, what's next, right? Like, okay, they're not allowed in NATO, but we're going to create an agreement with them. Okay, wonderful. I think this all rolls back down. Above and beyond that, with the PPI numbers, they're definitely raising interest rates. It's probably going to be more than most people expect. That should also lead the ES to come crashing down. The way that this area has supported itself, again, pushed it deep, pushed it deep. For me, I'm looking for a drop of this level, and I think this is going to be a decent, and again, you can put it on the 50 if you want, just to make it easy. 44, where's it at? 44.37-ish level, right? Add an alert in there. Again, that shows us that we've broken through the base here. We've broken through the buyers, and there's really nobody else confirmed until we get all the way down to the 43.95. So I think it's a decent rollover. Does it come today? We may be able to stabilize it, right? We may start chunking back down again. And again, we typically wait for a confirmation for one of these kind of Harry Potter trades. I think it's decent, right? Is it the best trade out there? I think there's probably some better ones, but there's been a couple ways to get into this one short. Even if you took the morning kind of sell up here, again, you'd already be short. We got to kind of clear that level. So decent, right? 1.2 through, we're averting World War III. Sounds great. Indices should go higher. Everybody's missing that PPI number that basically came in twice as bad, and that cost hasn't even gotten pushed out to the consumer yet. So I think that needs to be talked about. NQ had the same thing. Now, this one had a much better setup that I like this morning. Right around that 7:30, 8 o'clock window, we were actually in here, and there was actually an opportunity at 10:30 to get into it as well. Talking about 14,550. This was a 50% retracement from last week till, what was it? Yesterday actually would have been the low on that one. Seeing it come up, it hasn't pushed all the way down. Now, hopefully it can clear this last area of buyers. It's already up over a 1-to-1. It made it to about a 2-to-1. I would say I'm not super concerned at that one until we really get back down to really kind of this level here is where I would say that we got to watch out, and this would be our kind of profit target to the downside. Sitting at, 14,265. And like I said, we got FOMC tomorrow. Can FOMC talk about, we're going to go with a 50% raise and we're going to potentially keep something more on the table? Absolutely. Could the market prepare for that? Sure. So, fundamental reasons why, this is the one thing about trading. I love just standard trading. I think it's great. I love FOMC. I love economic news releases. I hate geopolitical events because they're not really something you can plan for. You don't know how people are going to take them. You don't know exactly what, who's going to swing what direction, who's going to invade, who's not going to invade, who's going to send missiles. Remember, there's been, history is littered with, not opportunities, but history's been littered with things like this. Remember, I understand Russia's kind of standpoint on this whole thing. They want security. They're a country that's been attacked and invaded throughout history many, many times. The Mongols, the Germans were basically on the steppes. Thank God Hitler won in Stalingrad, because if he didn't, God knows what would have happened differently. So I understand their assurances and the things that they want out of it. But, geopolitical events are one of those things you just can't plan for. As that good feeling rolls out today, I think this one continues lower. And again, with FOMC talking about raising interest rates because we are at 40-plus year highs with no end in sight, and things are getting worse, and they're broadening into other areas, other avenues. Yeah, I think finding short targets are really what's best. And again, this one is already in its move. This one had a little bit higher. The 61.8 was there, and again, it got really, really choppy. The 9:30, it spiked up, spiked down, came right back up to it again, and grabbed it. We're looking for this one short, and it does have kind of that same scenario where around the 50% we had some basing. This one took off and actually broke through the 50 at 3 o'clock in the morning. Low volume, it's not really the best opportunity to trade. The indices at 3 o'clock in the morning, it moves, but the low volume, it's just not there. So we were looking for short. This one was a little bit choppier around, which kind of makes sense. But it is the weakest. So if everything starts to roll, this one probably has the most to move. Russell. Now, Russell, we also have this one set up. I don't have an alert here yet. I guess I can throw the alert on here. Horizontal, let's throw it right there. Click this, add this alert, and we'll throw that on. So Russell, I like how this one really came down and pushed, and it started the U.S. session at that level, right at the very, very bottom. Okay, it's not a coincidence that both this candle here and this candle have the exact same bottom. I love how it was pushed off. I love the confirmation higher. I think that's great. There was a long opportunity here at 10:15, 10:30, kind of playing that retracement. When and if, I guess I have to say when, not if, because it'll break one day. I don't know when, but when, remember, I'm an if this, then that trader. When it breaks through 2040 or 2037 or 2039, I'm going to start looking at this one, looking for confirmation entry. It's got a 1-to-3 risk to reward ratio base all the way down to a profit target level, which again, we need to be out by this level here, which is at, what do we got? 2016. There's our 1-to-3. So it qualifies as being something that we'd be willing to step into. All right. So not bad. Not bad, right? And it's very similar. Now, right now, the Russell's the strongest if everything turns, which, again, FOMC absolutely affects and can hurt this position. Look for that one to continue to roll. Looking at two stocks real quick. Again, you can see that we had a nice gap up again, but what's happening? We talked about these rolling. We weren't able to break above kind of the overnight in Apple. Apple starts climbing back down again. It's going to start dragging the NQ with it, and that could be all the momentum that we need. Tesla, again, strong push up. It ended up moving off at 78.6 and is starting to push down. If it rolls back down and kind of comes to its low, also hurting the NQ. And again, we talked about the NQ. If it's drugged down by Apple and Tesla, this one completes all the way back to the downside, and we got some more room to run. So stocks are looking like they are starting to roll in that direction. Again, people are at lunch, so there's not much volume out there. We'll see how much move this can have. But you know, the big NQ stocks are showing us that we're going to start to see some movement. Now, oil. Oops, actually, let's go to currencies first, and then we'll cycle through oil. So I'm going to start with Aussie first. Now, let's move this back up to a 30 minutes. All right, so right now we kind of gave tops, bottoms, and potential areas for news. Since yesterday morning, we were sitting really right around in here. In 24 hours, this one has moved 3 pips. It went up and then kind of came back again and reset itself. You can see that, right? We pushed up and then we came back down. It's one of those things, it's very sideways right now. We do have a great release tonight, right? Click, reset. Oh, it's actually tomorrow. It's tomorrow. Tomorrow is when we have the unemployment change numbers. I'd like to see where this one is. I marked off the 71.75, right? If we're able to kind of cycle up, like we get some dollar weakness today, if we can cycle up, that could be a good news-based opportunity. Now, news is bonds. Where is it? It's in here somewhere. Retail. It's actually just, let's see. I'll put a line on it just so I can visually show you guys. It's tomorrow night at 7:30, so we're 19, right there. Oh, it is there. I missed it. Yep, right there. Here's where the news comes in. So I'd like to see where we're at for that news release. Again, great one to trade if you guys aren't familiar with doing it. If it rallies up, great. Looking at this now, one of the things I will say is you can see that this is kind of, you know, I don't do a lot of channels, but if you were looking to do like a parallel channel, you could literally draw a parallel channel to there. So I'd like to see if we can bounce back and forth. If we can be over here for news, I think that's a decent short. I'd like it to roll back down. I would say that there's one yellow news area there. I'd say that this is another yellow news area as well. If we're able to kind of break through here, that may be enough for people to say, oh, wait, the channel's broken. And I know it's not on perfectly. It'd be more there. If we can break through, that should be enough to drag some sellers in. I would say either of these two is probably decent. Again, one here and one here. And the question is, which one are we going to be at for news? It could give us a long and a short. I kind of like it long, but we got some room to run. So the scenario would be is if we kind of base through sideways and start to go down. If we can break out of this channel, as I said, there will be traders that are like, oh, wait a second, we broke the channel. That's it. Time to go short. That may artificially drive us down into that level. But those two levels are sitting at there we go. 170.96, and then again on the top side, 71.75. So both decent levels to watch out. And that, again, remember, those are news-based trades for tomorrow night. Aussie yen. So Aussie yen. This was kind of a news-based level. Again, that's why it's in yellow. You can see we got that 930 pop up, and now we're really stuck at it. We can actually adjust this, right? We can adjust this here to there and talk about that as a potential level. Again, we have the same release. The release comes in right there, right? And we'll see where it's placing itself. I do like this short up top at 83.85. That's got quite a bit of room to run. You're talking about, what, 133 pips between now and tomorrow night? Could it happen? Could. Is it possible? Is it possible? Yes. Is it probable? Not really. I would say at this point, if anything, look for this to continue, kind of roll back down again. Same thing. I would kind of like to get long this one, but it's got to kind of start pushing back to the downside before we can get there. So look for the pullback, particularly in the overnight as well as tomorrow. But I think we could get a decent long trade out of this one. But if it does nothing, if it goes straight up, then again, I'm looking at short. So right now, it's kind of a no man's land. Even if I run some fibs on it, I don't think we're close. We missed it by a little. The 50's in there. I'd say the 61.8, the level up here at 81.10 is better, but I'd say B at best. Okay. Euro pound. So Euro pound, we were looking for a break. Now, we did have a lot of basing, but then it based on the other side, kind of invalidated this one. This is one of those ones we were looking for a nice Harry Potter entry, right? A nice confirmation. And it dropped and came back and then dropped and just based. This base is way too long. Typically, like if this candle here, if it's a drop of one candle and we come up and test it, that's a great telltale sign. When it comes down and sits here and just goes sideways and sideways and sideways and sideways, that one took 1, 2, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours. It was in the same exact spot. It's not a short base trade. So one of those ones, it'd be nice to have an alert on it, but again, it spent way too much time, never gave us a great entry. So unfortunately, there's not much we can do with it at this point. So looking for tops and bottoms, that's kind of where we're at. You can see, going from low to high, you can see that, yeah, it bounced off the 61.8 once, and then it came and hit it again, and then it hit it again, and went a little bit lower, and then kind of bounced back up again. So it's not really following a lot of fib targets from bottom to top. Going from top to bottom, you can see that, yeah, there's a little bit going on right here at the 50, and there was some basing up there. That may be something to look into for kind of a 50% retracement. You'll have those fib algo traders that are coming into it. It's a decent level. Let's see what the like a 1 to 3 looks like, if that's something you guys could potentially take. It's being slow to go up. 1 to 3 is like right there. So we don't know what it's going to look like, but that's definitely one. Again, basing, 50% retracement. How much are we talking here? What's that risk look like? It's 8 pips, so it's a tiny one. It's a tiny, right? It's like, it's basically like 8 for like or 7 for a 25 in the other direction. So it's not bad. I mean, if we roll here, I would not also be surprised, because again, we got this sitting here. So their markets are over. So I don't expect massive amounts of volume. But let's see, let me adjust this just a little bit. Right there, that's a 1 to 3.1. I'm kind of looking at this one for tomorrow morning, right? This would be kind of an opening print for tomorrow. If we can kind of just mess around up here, this could be a European-based trade tomorrow with some of their news. Okay, 84.11. But as far as longs go, I don't really have anything until much, much lower. I mean, I guess there could be the case made that, listen, this bounced around, right? That would be a full retracement all the way back down. Again, it bounced and it touched and went. It didn't go very, very fast. But I would say that if you're looking for something long going into news, that would be an area down here at 83.52. Okay. All right. Euro yen. So Euro yen top to bottom, it did, we had a profit target a little bit lower. It had the same thing. It did have a level of basing. It did spike off. It did retest. So it is a level that we are going to mark off. Right now, we're not really close to it. And again, taking some fibs on this one, it's contracting a little bit. You can see we didn't really get into the 50. It was close. It's also kind of right here. It's not really in the middle of anything. So it really doesn't do anything for me. I would say right now, I'd be looking for long opportunities when we come down to 130.26. And again, this top, it's decent. It's not bad. Let's see. Let's measure it real quick. It's 21. Let's see if I can shrink it just a little bit. Yeah, I can shrink it. We're going to go there. Back up. Here you go. Tops and bottoms. Right there. And we'll put that one red. So 32.97 to 130.26, kind of a big area, but I would say if you're looking for something kind of in the middle, there is a level right there that you could potentially take shorts of if you want something a little bit more aggressive, particularly for news. And that one would come in right around 132.20, right? And again, base drop, tested, tried to fight it again. Seller stepped in again, pushed it down. They came up. They didn't even go as high, and then boom, huge collapse. So 132.20 would be the area. But you can see, got a little bit of room to run on this one, a little bit of space. Euro dollar. So euro dollar has a 50% retracement level as well as a level of basing. I may actually shrink this one just a little bit, kind of bring it up into probably that area. Let me see. Yeah, it's 15. There we go. We're going to shrink this one just a little bit. Bring it up to here. I have an alert set on this one. I'm going to set the alert here just to have a little bit more time. And this one's an entry right around 114.05. Again, 50% retracement. We had a level of base and we had a confirmation of it. Then we had a very, very strong push away. Don't know if we're going to get there or not today. This one's got about 56 pips. So it's got about a 1 daily ATR to go before we get to that one. But that's one I do like for later on the week as well. Now, if we can get there before FOMC, I think that would be absolutely incredible. It would be ideal because I do think we see some dollar strength coming out of FOMC, but we got there's a lot of time from now till then. So got some room, got some time on our side. Pound yen. So pound yen. This is also a level that we talked about. It was one of those ones top to bottom. You can see it right here. The 50% was also sitting at a level. It was a base. It pushed right into it. That 3 o'clock in the morning. Like, hey, you know what? World peace is here again. Everybody's hugging. That's what shot it up into that level, and it's been slowly kind of grinding its way back down again. There was the spike down and right back up again at the U.S. Open today, but again, that was one of those other ones that we had an alert set for when it reached, and it hit again. European pound yen is different than the ES. Why is the pound yen viable at 3 o'clock in the morning? Because that's when the European market opens. So it shot it in it, and it was kind of a parabolic retracement back to the downside. So it's there. Not much to say about that one. I'd watch that level. Probably wouldn't use it again. And there's two small levels for shorts up top, 157. But I do think some of the headlines that we saw earlier this week, they were mentioning that the UK was going directly and said that they would back the Ukraine. Right now, in the last articles that I saw, and again, I just want to make sure we just reiterate this again, because the UK is one of the countries that is saying that they're going to deal directly with the Ukraine. Now, you may say, well, what the heck why is the UK butting their nose into everything, right? Well, just in case there was any type of a conflict, right? Obviously, they are a very, very important member. You know, being an island nation up there, they are also not the largest country. They tend to be very, they look at their security as well. And something like this of, keeping communism away is definitely in their wheelhouse. So it's actually not bad because again, you remember what happened last time when there was a problem in the European, theater? Being an island nation up there, not great, right? They have a navy. Russia has a much, much bigger navy. If they get emboldened and they start to push out, you see where it's a problem for the UK, right? But they said that they can deal directly and they would support, which is a great thing. So there's the pop. We saw that nice little pop, and now it's pulling back as it's kind of dwindling away. We'll see if it continues to push to the downside. Pound dollar, kind of similar. You had the same 930, right? 930 punch down. This one also, we have an alert set on it, 134.17. It's a level that we've hit it a few times. Didn't want to look down. It's been hit before, so I'm not, if it hits it and bounces, I'm not worried. I'm just looking for a break of it. It got pretty close today, and it was a quick spike down, quick spike back up. Like I said, I don't know when it's going to hit, but when it does, I have an alert set that's going to send it to my phone and give me an idea. So let's see top to bottom. I would say this is another one of those ones where if we look for a 50%, it has been tested once already. Now, again, remember on this test, though, we actually didn't know. We would have had it drawn to here, and that's close enough that, yeah, you should have been entered. But now we know that it's right on. I would say this is probably good for one more hit, right? I'd say that 135.63 is probably good for one more hit. It's obviously already moved its 1 to 3 risk to reward ratio off its first, so this is hit number 2. Not as high quality as hit number 1, but that's something we mentioned yesterday morning. That was yesterday morning. Yeah. Oh, excuse me. Sorry. The little one's keeping me up again. But I think 135.63 is pretty decent. And then again, we still have a level up top that we need to watch out for. All right. So don't know when it's going to hit. I do like this one short. If we can be sitting in this level tomorrow before FOMC notes, like if we come down and then start to base sideways, love this one for a short. Think this one is great, especially with, hey, listen, we're going to raise it 0.5, right? Remember, the UK did 0.25, 0.25. If we slam in a 0.5 just like that, bam, that means our currency is up there in the playing is where people want to put their money to get an interest rate back again. That's some dollar strength. I know the market's got it factored in, but it's one of those things that 0.5 is so big. And if they mention what they could do again after that, it's like bam, bam, like 1-2 punch, right? So I like that one. But look for the pre-market movement is going to be the telltale sign. Now, dollar CAD. Dollar CAD was one of those ones. This one was talk about frustrating, right? 5 o'clock this morning, this one was pushing through. It kind of gave us a base, and it was, kind of basing in here again and kind of hitting back and forth. But once it started doing this drama, it's like, listen, this should have already been on its way. The U.S. trader came in, and all of a sudden at 9:30, boom, they spiked it. Again, that was the oil weakness coming through. It did go up and grab that higher level. This is one of those ones that you can see that it made it, about 2/3 of the way through. It made it to a 1 to 2.8. Right? I'm sorry, 1 to 2.38. So just round it to 0.4, right? you were in our 1 to 3 risk to reward ratio, we were 2.4. Is it worth risking 2.8 risk for 0.6 risk? No. So you most likely would have got stopped out at break even, or kind of banked some of them depending if you were trailing it in. It's unfortunate. It should have gone all the way down. It didn't. So again, trade is over. If you got stopped out at break even, oh well, it happens. But right now, I would say that again, this is a decent short. I like this short. I think we have some CAD strength coming in right now. I would not be short this pair though for FOMC. I don't think that they're going to have. I don't think they're going to have another dovish statement in a row again. I think it'll be something a little bit more stronger kind of crafted. And again, by saying it, it doesn't change it yet, but the market wants to react. Okay, so the market will start to react a little bit ahead of time. But right now, I like this one week because I do think oil comes back. Oil comes back. This one drives down, brings it down maybe to the lower level here, and then FOMC comes in, we run it back up again. We're really just kind of stuck, and you can see we've been kind of stuck in this channel now since we entered the channel back on January 26th. So it's been 2.5 weeks. We've been stuck kind of in this one little 100 pip range. So, but like it to the downside, you'd already be in a trade, so there's not much we can talk about besides that. Dollar Swiss. So dollar Swiss, up, down, up, down, up, down. And remember, it's like, oh, world peace is here, but I want more missiles. But world peace is here. It's the back and forth thing. Dollar Swiss is just very, very flat. Not really any great trading opportunity, so I'm going to skip it and kind of just save the time. Dollar yen. You can see dollar yen on its pullbacks, sliced through the 23.6, sliced through the 50. Didn't quite get to the 61.8. It was at a level of basing and then kind of bounced, then came just a little bit lower and then did it again, and it's kind of pushing. So, I would say, fib-wise, let's pull fibs off just so we can see a little bit better with it. I still think this is a decent long when we can get here, the 114.93. Reason why is because we had nice base and we had a strong push off, and then we came down, and the next time it touched right where the people took off again, bam, it went right back up again. So I gotta get the right green. Right, top side again. If we do some fibs and we go top to bottom on this one, right, you can see that the 50 it hit it, and this wasn't the worst 50%er, right? It formed this one at 12 o'clock, came back and touched it at 7:30. It wasn't the worst one, but as you can see, it came through and broke. Like, is the movement there strong? Yeah, it's not bad. This is a better area here. It's much stronger, and you can see we just barely touched the top of it. So I'd say this is a hard one. I don't really like the dollar yen as much right now, particularly around a session open. It was there. It's all right. I'm sure there's some fib traders that lost some money that were trying to trade this one because it did break through the 61.8 and then went exactly where they expected it to go to. Would you have grabbed the higher one? It's better, right? But setting the risk in would have been a little bit more difficult. So not a bad trade. The dollar yen is very hard to play right now because there's so many factors that are involved with it. I mean, you have interest rates, you have dollar strength, you have the overall indices affecting it. You have the world peace in there. When we rise it, is the dollar more attractive? But what about the yen? Because the yen will start getting, people will start borrowing the yen. But then is the interest rate good enough? If we want to mess with the yen, do we want to do it against the dollar, or do we want to do it against the pound? So there's so many competing kind of factors involved with it. Typically people go with the pound yen, but if we raise 50, then we're at the same interest rate kind of return as what the pound is. All of a sudden, the dollar yen becomes more of a carry trade than the pound yen does. So some interesting factors going on. But right now, if you're long or you're short, just be cautious of this. I think 116.25 up top is good, and I think the 114.93 is good. Right now, we're a little bit slower during lunch, and again, FOMC. This is kind of a strange FOMC one because we can have massive dollar strength coming in, but we can also have yen strength coming in from it. So it's got a couple different factors involved. Let's go across the commodities. All right, so commodities-wise, we ended up bouncing off this level, which again is typically a telltale sign we're going to break it, right? We came down, we based, and it's like, listen, we got our one touch here. We got a touch in there again. We're coming in again. It ended up slicing through. The original trade setup was here on the pullback. This one, you could have gotten long. I don't think it made it to a 1 to 3 this morning. Let's see. One to 3 is right there. Close. Super close. Made it to, this is a 3.1, and you can see it didn't hit. Let me see if I can get it right on. There you go. That's dead on. Yeah, you can see you just missed it. Just missed the exit. So you know, I think it's nice that now we have this agreement. It still doesn't solve the fact that demand is increasing and OPEC is not increasing as well. I mentioned earlier today also. One of the things that is not really talked about is even if not so right now, if you think about where are the winners and losers from the whole Ukrainian crisis coming from, right now is 100% Russia. It's 100% Russia is winning. Here's why. So if they get the assurances that, hey, listen, we're never going to attack the Ukraine, we're going to leave it wide open for you to take over, right? We're going to leave it wide open. No NATO. Now you're going to get less missiles. You're going to get everything that you want. Understand that even just since January 1, I think we figured it out. Just simple math. We rounded down so it's more conservative figure. Russia has made $8 billion just in the price of oil so far, right? Just since the beginning of the year, $8 billion. They can build themselves another aircraft carrier. Actually, more than one aircraft carrier, right? Just with the money they've made in oil because of the way that prices rose from this whole thing. So is this a way to pad their coffers? Absolutely. So don't be surprised if this continues to go higher. I think this is a buying opportunity as it comes lower. Is it turning at the amazing spot? No, but there was your pullback. I mean, it kind of makes sense. It was a 78.6. It was also a level where price pulled back on this impulse correction. It went off that level. There were buyers there, and you can see it's taking off in the other direction. So, I think oil goes higher. Do we break 95 again? I don't know. But remember, it is Tuesday. We do have an API oil inventory report coming out today, and we do have that tomorrow, right? We have where is it? Crude oil inventories. We don't have a forecast yet, but last time there was a huge down draw. So question is, if we have this big down draw yet again, what does oil do? Most likely it positions itself back higher. But I think at this point, now that we've broken through 95, I think you got to say that 94.50 is right here. I think you got to say 94.50 is on the table for this week. Right now we're at 92. You're like, well, wait a second, we're going to jump $3? Yeah, $3 is basically the move we had today. Today was 274. Can we move that by the end of the week? Yeah, absolutely. So I think got to find some opportunity because being down 2.89%, great. Seeing that cost of shipping and inflation and everything is really, really high, I think you got to look at it this way. Look for long opportunities. Natural gas is up to 225, and look, it's pulled back. It's up 229 today, and it's done this entire pullback. Again, the 8 billion. Russia is the number 2 energy producer in the world because of natural gas and oil. We just talked about the oil prices. God knows how much they've made since January. Now this is more down. Actually, let's see. January we were down here at 350, right? So they've made another 75 cents on this one. I don't even know how to calculate it over here. They've made even more money off of this. Now, not as much as they were, but a lot of this is, wait, we're gonna do sanctions. Okay. You're not allowed to sell your natural gas. Ooh, that hurts. Okay. Now, I don't know if that has to do, again, natural gas is one of those things that is a very sensitive number. It is definitely higher than what it normally is this time of year. It is very, very sensitive for Europe. They use a lot of natural gas, and it all comes from Russia. Or most of it comes from Russia. So there is kind of that. That could be what's leading some of Germany to have the statements that they're saying. Funny, though, that oil is getting hammered, right? But natural gas is really more kind of what matters, right? Natural gas is a big thing for Europe, and prices are going higher, showing that, yeah, listen, it's there. Now, gold taking it on the chop. So yesterday morning we mentioned gold because it was one of the big movers. We mentioned 1880, and I missed it by one. It made it to like 18. Was it 18? Yeah, I missed it by 50 cents. 1879.50 is what it made it to. I missed it by 50 cents. And you can see the big drop, and we talked about having another opportunity here to take that short. Now, after a big move in price, we tend to be a little bit more cautious. We were hoping for a rollover here. The trade setup would have been here was number one. We haven't gotten an entry. It literally spikes down and comes back up again, spikes down and comes back up again. So we haven't gotten the second entry, but I think gold gets itself down to 1835. FOMC, I think, is also going to be bearish for gold. It's already starting to pre-position now. But I do think that this one comes back down and probably I don't know how bad it's going to be, but we'll see where it's positioned ahead of time. I do think gold continues to come lower. I think a lot of this was the pre-selling. But yeah, it's always unfortunate when you miss it by just such a 50 cents, right? It's a 1,800, 1,880, and I missed it by 50 cents. Drives you crazy. But with it basing right below like that, you're like, yeah, just go. That's why sometimes using things that you're close on are better than being 100% right, right? So this one's good. Again, silver, gold's down 1, silver's down 2.3. Makes complete sense. This is a level we marked off before. We talked about 24 being the major. I don't know if you guys can see this on the right-hand side. I can read it to you. Talked about the level that it was in here. And again, we marked this level off and said, be cautious of it. 24 is going to be a huge psychological number. It protected itself right here. And then we talked about, breaking 24 would be the big deal. It has to break 24 to go any higher. And if it can't, watch for it to fall big. It got to $23.98, 98.8. So this one missed 24 by 1.2 pennies and then rolled back down. So again, that was a level we talked about before. We can delete some of these. Let me pull these off. I don't need that one. Oops, that was a fib number, obviously. Yeah, I don't need the fibs on that one. There we go. So downwise, I think 2283 is really the target that we're looking for. Do I want to get into this one now? Do you want to get short after it's down 2.33%? Not really. Not really. It's okay, right? But most of the movements already happened. We gave you those numbers yesterday morning, so hopefully we were able to grab them. Scrolling down, let's see what cryptos are doing. Like I said, we talked about a level here. We hit the level, we pulled back and started the base. That tells us it's going to break. It did go a bit higher, went for the 61.8. So at this point, I would move this one down. All right, I would take this and say, okay, listen, we were looking for a short, but we do have this parabolic move. We do have a base, and it is a prior level of a 50. So we don't need this one here. We weren't interested in taking that. I'd say there's probably a short trade here for crypto traders if we have a break of what 43,423. Look for that to go lower. I definitely, if you guys are trading crypto out there, with Bernard speaking Friday, definitely look for some type of rally in price before she speaks. I would look to get short more than anything else. Ethereum would be the exact same way. Ethereum had a level. We had 2 touches. This one ended up blowing through. Again, this was a late last night thing, and it came back up. And yeah, grabbing the sellers right here. There's a wick over wick, and that's what it grabbed. I would say kind of the same thinking on that one, right? If you get short before she speaks, probably not a bad idea. The other meme stocks out there, they're kind of doing their thing. Dogecoin is doing the same thing. And then bonds also getting lower, which shows us that, hey, listen, risk is back on, right? Ukraine is solved. Hey, let's get into those risk assets. Until they raise interest rates, not a bad place to be. So let me see if the VIX is doing anything else. Now VIX is holding, going up a little bit. Dollar, more or less stabilizing. So yeah, is what it is. All right, so that's it for today. Like I said, the big kind of player out there right now is obviously everything going on with Ukraine. The United States says, hey, listen, according to satellite imagery, we've seen nobody pull away. Russia's like, no, we're pulling troops back. We're going to start doing it. And now that I guess the Ukraine is not allowed to join NATO to protect itself, I think I'm scratching my head at that one. I don't understand how people want to protect themselves. And why does Russia's protection take precedence over the Ukraine? They've already invaded it once and took a sliver, and now they're looking for more. So don't know, but I guess that's why I'm not in politics. But anyway, mark your calendars off. Next week, Tuesday, February 22nd, 12 p.m. Eastern, we'll be back. If you guys have any questions for me, emails right here in the middle, support@keeptradingsimple.com. Don't forget, Todd and I do the morning show every morning at 8:45 on YouTube. If you guys don't know where that is or you want to find it, go to YouTube, search Nadex, find Nadex's page, hit the subscribe button, and then click the bell notification icon. That way you'll get notified when we go live, but we go live at 8:45 to 9 a.m. Monday through Friday, and we talk about what's hot for the day. So with that, I'm out of here. Thank you guys so much for joining, and I'll see you next week. Take care.